Welcome to TradeTheNBI.com. This is John's reports for the 11th of July. Well, some people might say the insanity continues. Others will just say, you got to go with the momentum. And it's not even momentum. I mean, literally, it's just a built-in case for the situation. You've got a paralyzed Fed that really hamstrung. They have no choice. They need to lower rates to uh, save the government from its own economic folly. Um, you've created a economic situation that is precarious at best, and a global situation that's deteriorating on a regular basis. You had Modi from India and Russia, and, hugging Putin and that, along with Xi in China, and so you've got this situation where the U.S. is basically failing at its dominance, but that is a great thing for the market, and you can see from these readings there was never any question about it. I mean, we have magenta over yellow, uh, rising gray, and that. But I mean, the shakeout has been beautiful, along with that rising gold. No reason to fight it, as we talked about before. When that cyan under red, always a buy, incidentally. But that steel staying below meant that any pushback up, you got plenty of short-term money available to create these kind of setups. And so all they look for is a little spike in short interest, and then you drive that as a short cover, and boom, that's what you get. And as I said, 6,500 for the S&P is not out of range by any stretch of the imagination. And as ridiculous as it sounds based on where things are going, it's nonetheless just a byproduct. Um, you continue to, jawbone reducing rates. I mean, this is all they keep talking about. It's the perception. And perception is reality, particularly when it comes to market trading. If the perception changes, everything changes, which is why things can go south very quickly. So we always keep an eye out. Yes, all positive extremes. So eventually this will all come back. So click there, let me get rid of that. But positive extremes here from the NASDAQ begin all the way at the beginning of this breakout. So uh, you know, it's just a matter of waiting for that to take place. And in the interim, you follow what is, which is current long streak. Probably within today's range or the next couple of days, you'll get some fill back into that, because whenever you have a big move day, you can get as much as 30% to a half move back into it, just to fill in some of the action. And this broader confusion from the bond market. Well, if you basically have ended the bond market, so where do they put all that money? That's a lot of money. And this gets into I had a question the other day about gold, and why I was bullish on gold with rising rates the way they were, and why would I even think for a minute that in rising rates gold could go up? The same thing happened in the 70s. Once there's a loss in confidence in the understanding that the Fed is actually responding to true rates. Even if you increase rates where they are right now, it is not the true rate of inflation. And so there's a disconnect between what the Fed's going to do, and if they cut into what is already accelerated inflation, gold has nowhere to go but further, because it becomes preservation, about protecting, value, and to some extent that extends to the crypto world, mostly just because of its convenience in a digital setup. But it's not quite the same as actual physical gold, which is why you see central banks around the world buying in record amounts, and you're not having the Chinas or even Russia, pushing into any U.S. treasuries or anything. In fact, they're making arrangements, and that was the whole point of India being in Russia. They owe some $40 billion for. Well, actually, it's in rubles now, because they're not trading in dollars anymore, and they can't really pay it because the U.S. has threatened their friend that if they make any payments, they will put them on a sanctions list. So, he's sitting there begging for that cheap oil because he's getting it at a third of the cost, and they don't want to jeopardize that because it's fueling their economy, and they definitely want it, and they just have to figure out a way to balance that trade out, and that's what the whole BRICS concept is working on. And it might take them some time, but when it does, it's going to be devastating, because there's going to be a lot of resentment to the U.S. from all of its different partners, because the policy has always been about threats and intimidation rather than mutual support and cooperative growth. So it's broader issues, not really relevant to the market at this particular stage. And you can see, even from a euro standpoint, a ridiculous situation with the euro to the dollar, just because of the perception that the dollar is going to be less, simply because of lower interest rates, which aren't actually happening yet. Still think there's a good likelihood that they'll try to do it before the election, but that's proving more problematic, because if Biden's replaced in that, then the Fed doesn't necessarily have to do anything related to that. And it's gotten very complicated, and that's going to be an interesting one. And I think the market still doesn't have a clear idea of exactly what to do with that. Here's gold right now. It's still stuck right here at the 50% range, but it's got its opportunity now, and definitely expect the highs to break out past where they are. It's just a matter of timing, and the market is just going to be, a little bit slower as far as that goes. When it does happen, though, the acceleration of gold is going to be quick and rapid from a Bitcoin standpoint, and barely holding on above that second level of retrace from the positive extreme. So, everyone was so excited about that big move. Woo, big move. But there still is potential that in additional weakness, Bitcoin would definitely break this lower support and head to that last positive extreme at 48, which would be a freak out for a lot of people. But it's very possible with that Mt. Gox situation and the amount of money that's going to flow in, and whether these people want to liquidate those gains over the last 10 years that they've been crippled from. It'll be interesting. We'll see how it plays out from an ETH standpoint. A little slightly better than Bitcoin's doing. And there it is from the chart standpoint. So after the initial one came back, but bought it back in again. Where was that it bought? Right here. Yeah, the 56.28, and then again at 56.39. So decent move. And that's extremely parabolic, and anything, that extreme is definitely going to have to fill back. So it's just a question of waiting for it to happen. And not there at this particular stage, given those readings. Look at how beautiful that is from a bullish DOC, MBI readings, all fantastic. Post-market right now, it's a bit flat, a little bit of movement here in the European session, but nothing of note. If we go back to the actual day activity, there wasn't a whole lot to talk about. Little brief fill back into the early morning, and then it was just up. So that was all pretty straightforward. So those are the broader considerations. As we go on into the week, I'll talk about what the triggers are going to be that will probably create a much bigger move from the market, and particularly to the downside, because shocking move to the upside is really not really a thing at this particular stage. So, as always, though, trade well. Anything relevant, I'll put on the Skype chat. Have a good one.